Hello everyone, this is James. Welcome back to my stock channel. Please subscribe to my channel for continuing updates on this one because we're going to be talking about it. JD Sports Fashion ADR from Great Britain, Manchester. JD SPY, JDSPY is the ticker symbol. $1.97 a share. Fantastic company. Way too many shares issued. That's why the low price. What I like about this one is it's low priced. I can sell covered call options every week whenever I feel like it and pocket the income it collects. I can buy 100 shares of this at $1.97 and then collect 15 cents by agreeing to sell it to somebody for $2.50 next Friday if it hits that number. If it doesn't hit that number, I just keep their 15 cents. That's called a covered call. You have to own 100 shares of stock. So in order to own 100 shares of stock and have it not cost a cajillion dollars and have a diversified portfolio, which is important, I have chosen good companies that are a little bit more heavily diluted than other companies. This one, dilutions usually can be a bad thing. It can be it's usually a bad thing. It's usually them offering more shares for more money. But I want to tell you the story of JD Sports Fashion real quick. I think you'll like what you see. The 5-year chart, we were screaming up here pretty darn good. $3.24 up here at the peak. At the base, $1.86. Yeah, the whole thing is a tight range. The stock goes back to 2020, so I'm guessing it's 3 years old. The 1-year chart, it's up for the year. The 1-month chart, not a good month. It was also a horrible market month. The 6-month chart, up 74% in 6 months. Wow, you did pretty darn good on this one. Where the heck did it come from? Went from $1.18 it was at. Wow, that was a good deal. But that was before all the good news came out about how big they're getting. This is their income statement. Ooh, look at that big one on the end, on the far right. Oh yeah. $8.56 billion worth of revenue in a year. This is a fashion clothing company wholesaler. They sold that wholesale. That's not the retail price. That's the wholesale price. They made a profit of $369 million. That's a lot of money. They made money last year. Not as much. They only made $224 million. They did less sales. They made money the year before during COVID. They made $246 million. Did $6 billion in revenue. It's getting smaller. $4.7 billion in revenue. They still made money. $261 million. I like these people. Revenue, $3 billion. Guess what? We made money. $231 million. So they're good at making money. They're growing. Looks like a nasty big surge here from 8.56 to, this is 25% year over year. That's like a tech company or something. So apparently this is hot in fashion. Maybe if some of you know anything about JD Fashion, I'd like to take a look at some of their clothing before I buy the stock in it. I want to see if I think it's stupid or whether I think it's cool or whether I think it's a fad or what it is. I want to learn a little bit more about it, obviously. The income statement is fantastic. The growth is fantastic. It's a profitable company. It's under $2. This is the type of company you can buy and sell covered calls on every week and collect your 15 cents tax every single week. It doesn't seem to have a big price movement, so that's nothing to worry about. The operating expense is $861 million. They have a lot of employees. I guess that's where all that goes. That's their operating expenses, 1/6 of their revenue, less than a sixth, probably a tenth. That's a pretty good ratio, actually, compared to most of these companies. Usually their operating expense is the same as the revenue. This one is like just a tenth of it, which is kind of refreshing. And we get down to the balance sheet, right side up. Inventories, I would imagine, are reflected here. They have almost $8 billion of stuff in stock ready to sell. They owe $5 billion on that stuff. Their credit usage went up a little bit. They have $1.14 billion in cash. I think as the assets, as they sell clothes, they pay this off, and then they buy clothes on credit. This blue line and this yellow line are driving hand and foot together, I believe. I believe this is them buying the material, and then this is once they've made the clothing, they put it in stock, they call it an asset. So you have the people you owe money to on 30-day terms probably, or 60-day terms, and then you have the value of the clothing itself. But it's right side up, and it's profitable, and we're talking billions, and we're talking about 25% growth here. We're looking at a company that can buy some of its shares back. I was telling you earlier in this little party that they have a lot of shares out there. Well, how does 5 billion of them sound? That's how many shares they have. Oh my goodness. That's a lot of shares out there. So basically, if they're going to have to save up $1 billion like 4 times to get this thing down to 1 billion. Can they do that? Well, when you're raking in, let's see, how much a year they raking in last year? $369 million. Yeah, that's almost half of $1 billion in 1 year. And if it's growing at 25%, I think it just eats itself for lunch if this continues. I think the growth, if it grows like this, for the next few quarters, if we get up here to where it's making $1 billion a year, you're going to see stock buybacks. You're going to see this thing just double overnight. Then you're going to see it double again overnight. The next year it might double again overnight. Or they might just start methodically buying them back slowly. They need a stock buyback or a reverse split or something to get the price higher. If they want it higher, they might not care. They might be perfectly happy leaving it like it is. It's 6 of one, half a dozen of the other. They can chop the pizza into however many slices they want. The pizza still has the same market cap, so there's nothing to sweat in that regard. I like less dilution because it's a place to go in the future. If you need money, then you have the ability to dilute your stock further and raise capital that way. It's a great way to raise capital by selling more shares of your stock. This company has so many shares, I couldn't imagine them doing that again. And I don't know how much money they would get out of it if they went and halved this and issued another 5 billion shares. I guess they might get $5 billion. But selling into that kind of pressure would just cause the whole thing to go to zero probably. So I don't think they have another dilution in them. They have plenty of credit. It looks like they have a very desirable brand that's growing in sales. It's leaving the store shelves and they're ordering it again. Let's do some more research on this. Let's continue coverage. I'm a fan. I'm mostly a fan of covered calls. I like to buy a stock like this and then make 15 cents a week off of it by offering the $2.50 to, like in this situation, I'd do a $2.50 covered call for next Friday. I'd put 15 cents in my pocket every week. And if it doesn't hit $2.50, I get to keep the stock and I get to keep the 15 cents. If it hits $2.50, I have to let it go for a nice profit, which isn't going to upset me one bit. I'll just wait for it to go back down again, and then I'll get back in. Or I'll never own it again, and either way, I have the money. So call it what you want. I am a fan of JD. We're going to do another video. We're going to look at their clothing. Hopefully you guys will leave some comments. Tell me whether it's cool, whether it's something you'd wear. Tell me whether it's priced right. We're going to find out who sells it in the United States. We're going to find out who sells it in Great Britain. We're going to find out all kinds of stuff about JD Sports Fashion. I like the company. It's growing. I wouldn't consider a textile company or a clothing company usually. But this looks just like a healthy business, like people that are smart, you know. They're not doing this to lose money. They're not, they don't have an unprofitable situation going on here. I see that story so much. And you don't see that story like ever. It's like they're scared of losing money. It's like they buckle down in October because they know the year's ending. And they're like, oh my God, we need to get profitable. And they always do it. This place is amazing. We're going to go back and see if they've ever had a down quarter. I don't even know. I don't know how far back in time do you have to go before you find a down quarter in this company? It's more than 5. I know that. And 5 years of up years. So, big fan. Let's look more at the clothing. Let's dive into this one. Let's sell some covered calls. Do some research on covered calls. You need to own 100 shares of it. So you'll need to spend $197. And then you can start collecting $15 a week rent with your $2.50 offering of your call option. You're going to be selling it to people that like to play the options game. So you get to be the money collector guy, which is kind of a nice, or girl, be a nice place to be. But I'm getting to be a big fan of this one here, JDSPY. Check it out, learn more. Another video coming up to show off the clothing. We'll rehash the stock. I can already tell you that I'll probably just be buying this one off the balance sheet unless the clothing is god-awful. So let's just hope for the best. But I'll do another video either way. For more updates on this company and to be kept in the loop, subscribe to my channel and like the video, please. I really appreciate you guys. It's been really fun doing this, showing off all these companies. And we're kind of like, you know, we're at Goodwill and we're looking for bargains. That's what we're doing here. We're looking for pieces of gold out there. And I think we might have found one that is definitely looks like gold. Now we just have to go get it tested. So we'll do that next video. Thank you very much. Have a great night.